Hello and welcome to the look ahead for Tuesday, the 12th of December, with me, Fiona Cincotta, Senior Market Analyst at City Index. So on the earnings front, there are no major earnings that we'll be watching out for, but there is plenty to be tucking into on the economic calendar. First up, overnight, we're going to be seeing the Japan PPI will be released. It's expected to grow at 0.1% year on year, down from 0.8% previously. Now, this is going to be really in focus. We had some slightly softer than expected Japanese tool machinery data in last night, and that's actually created quite a big sell-off in the yen today. That weaker data sort of points to a weaker demand picture in the manufacturing sector in Japan, and it's just seeing the market reverse some of those gains in the yen from last week when the yen rallied on expectations of a hawkish pivot from the Bank of Japan. So what we're seeing is, as the market is sort of reining in hawkish Bank of Japan expectations, at the same time that it's also reining in dovish Federal Reserve expectations or bets. And as a result, we've seen quite a big move again in this US dollar Japanese yen today. So the yen, as we can see here, fell just down to that 4-month low, towards that 141 at the end of last week. It's rebounded really quite sharply, and it's actually just testing resistance there on that falling trend line resistance that just dates back to the beginning of November. If we do see a rise above there, then I think we could also be looking for a test around the 20 SMA, sorry, the 50 SMA, which is around the 149 level, which will come up next. If we do get a move above that, it's a pretty key level that it's testing, right now. We've not only got that falling resistance but we've also got that rising trend line resistance, which dates back much longer. So that could prove to be a pretty tough nut to crack. But if we do get above the level that we are trading at now, which is around that 148.50 level, then we could expect to see further gains towards that 149.20 level. Again, I think that move not only going to depend on the Japanese PPI data. As I said, if that comes in weaker than expected, I think it'll just fuel bets that actually maybe the hawkish pivot from the Bank of Japan might not be coming quite as soon as the market was anticipating last week. Other things to be watching, obviously, which we'll talk about a little bit more shortly, is the US inflation figures, which are out tomorrow, and which will also be a key influence in the pair. If we do have hotter than expected inflation, then again that could help that pair push higher. Just going back to what we'll be expecting, UK jobs data, it will be out for October. Now, unemployment is expected to hold steady around that 4.2% level. Average earnings are supposed to ease just slightly down from 7.9 previously to 7.7%. That's still pretty strong average earnings. Again, I mean, the Bank of England will be looking at the trend. They'll be looking to see that this is trending lower. Obviously, if we do get average earnings coming in weaker than expected and higher than expected employment, so signs that the UK labour market is starting to cool, then that's going to support a more dovish approach from the Bank of England. And the Bank of England, obviously, they've got their interest rate decision later this week on Thursday. But heading into that decision, speakers from the Bank of England in recent weeks have been sounding a little bit more hawkish than their counterparts at the ECB and at the Federal Reserve. This is just having a quick look here at average wages and how they've been performing. As we said, the average wages have actually or did rise to a record high just a few months ago. So that's, as I said, it's going to be a key influence for inflation, along with, we know the Bank of England also watches carefully the service sector inflation as well. Now, what does this all mean for the pound US dollar? We've seen the pound US dollar hit that 127, push towards that over 127 at the end of November, and it has since been falling lower, currently trading around that 125.40 level. There's a support there, a relatively strong support around 125.50. If we do see a break through there, then I think that's going to open the door to sell off towards the 200 SMA at around the 124.20 level. If we find that 125.50 level hold, then 126, that was sort of the late last week highs. That would be the next level for the buyers to be getting over in order to bring that 127.30 level back into focus. So again, just going to look back with what we'll be watching. We've got, so Japan inflation, UK jobs data, it's a busy day tomorrow, I told you. German ZEW economic sentiment, that's expected to ease slightly to 8.8, down from 9.8 previously. I mean, here we just have a look. This is the German ZEW economic sentiment over the past few years. You can see it has actually just picked up from the lows that were reached earlier in the year, sort of just a few months ago. So, there has been this sense with German data coming through that perhaps the worst of the downturn, or the downturn appears to have bottomed out, at least for now. Data it's not generally moving to worse than it has been in the past few months. We've sort of seen PMI data just starting to pick up, still in contraction. Economic sentiment, okay, it's expected to ease, but it did pick up very strongly in the previous reading. So it was previously negative and it went shooting up to that 9.8. So just some consolidation there. And what this all means, again, for the euro US dollar, we've also got obviously the ECB rate announcement this week. The ECB has been sounding much more dovish than the Fed or the Bank of England, in fact, after inflation cooled to 2.4%. So it's getting really close to the Eurozone's 2% level, which combined with this weaker growth that we've seen in Q3, potential recession, as PMI data this month has been cool as well, below 50, has just kept pressure on the euro, particularly against the US dollar, as we've seen a sort of the markets reassessing perhaps how dovish the Federal Reserve may be at this meeting. So as a result, we've seen euro US dollar come break down below its 200 SMA. That's around the 108.20 mark. It's down. It's testing support around the 107.50. Again, this seems to be a fairly solid support that's in place. And if we do take that out, then we can expect the bears to be looking to the 106.65 level. That was last week's low. If we do get a breakthrough there, that also takes out that lower, that rising trend line to the lower band of that rising channel. So a breakdown there. Also, just notice you've got the RSI, which is below 50. So that does also support further downside. So I think there's a fairly bearish look to that chart still. But as I said, be looking for a move below 107.50 to take out 106.65. Okay, and then just finally, the last piece and perhaps the most important data point this week, just bear with me, sorry, will be the US inflation report. That's expected to cool to 3.1% from 3.2% previously. Core CPI is expected to hold steady at 4%. I think it's just worth bearing in mind here, if we remember back to, this is the November reading, if we remember back to the October reading, so this time last month, when we got that October reading, that's really what, it came in much weaker than expected, and that's really what sparked those dovish pivot, those dovish Fed bets, and sort of, sparked that rally across November. What we've seen more recently, and especially after the US non-farm payroll data, though, is that expectations regarding rate cuts by the Fed next year have actually been reined in. So, so the jobs data came in actually a little bit stronger than expected. So although we've been seeing US data offering some signs of coolness, nothing alarming, just enough to suggest that the US is heading for that soft landing. We did see US jobs data come in stronger than expected with an unexpected drop in unemployment. So that's all come through, and that is been supportive for the US dollar broadly. As instead of sort of the market's pricing in 125 basis points worth of cuts next year, it's now pricing in around 100 basis points worth of cuts. The market was pricing in around a 60% probability of a rate cut in March, around just over a week ago. That's now down to 40%. So there has been sort of, a reflection of that data in rate bet expectations. Now, with the data tomorrow, if we do see cooler than expected inflation, then we could expect to see the dollar fall lower. We could expect perhaps a positive a reaction from equities, and gold would be another one to be watching carefully. We could expect to see perhaps some return in showing of gold bulls. Obviously, we had those gold bulls push the price right up to that record high at the beginning of last week. Gold has been falling steadily ever since. It's taken out its 20 SMA there. It's fallen below that 2009 support. If we just look, RSI is looking to favor sellers, and we've also got a bearish crossover on the MACD. So I think overall this is looking relatively bearish chart. I think the next level that we'll be looking at here is around the 1963, which is the 100 SMA, and then you've also got the 200 SMA around the 1951 level. Take out those, we'll be heading back towards, it'll bring 1900 back into play. Buyers are going to need to get back above 2009. That's going to be the key level for the buyers to push back over in order to get some a higher high and strength back into the gold chart. Excellent. A little bit longer today because there was so much to get through, but I hope you enjoyed it. If you do like the video, then please remember to press like, and also follow if you want to receive more video like it. Have a great evening.